I'm going to the stories about U.S. credit card defaults, jumped to the highest level since 2010. That's 14 years ago, folks. Credit cards. A lot of people are dealing with this right now, and it's a very challenging place to be. I remember when I was $49,000 in credit card debt, it feels like you're suffocating when you're in it. Credit card defaults in U.S., highest level since 2010, with $46 billion in seriously delinquent loan balance written off in the first 9 months of 2024, a 50% increase from the previous year, according to bank reg data. Mark Zandi of Moody's Analytics highlighted the financial strain on lower-income consumers, stating high-income households are fine, but the bottom third of U.S. consumers are tapped out. Their savings rate right now is zero. Rising credit card balances and interest costs have worsened financial stress, with Americans paying $170 billion in interest over the last 12 months. $170 billion just in interest last 12 months. Credit card balances exceeding $1 trillion for the first time in mid-2023, fueled by post-pandemic spending and inflationary pressures. Consumer spending power has been diminished, says Odessa Pampidimitro of Wallet Hop, as delinquency rates remain nearly a percentage point higher than pre-pandemic levels, pointing to more pain ahead. Credit card charge-offs and delinquencies at a 13-year high. Now the story right behind it. Tom, your thoughts on this year?
Well, we've been talking about this. Remember, a year ago, we said that the credit cards had gone way down with stimulus checks and a lack of spending because you couldn't go outside. You weren't going outside. You weren't traveling. You weren't going to restaurants. So discretionary spending on those sorts of things, travel, amusement parks, movies, outdoor leisure, and going out to eat were off. So people weren't spending on that. And they got stimulus checks. Remember, the credit card balance went down to like $500 billion, I think it was. But then all of a sudden, it was time to go back out and play. And what did we do? We ran those credit cards up. And it was earlier this year that we covered on this podcast when the mainstream media wouldn't talk about it because they didn't want to say anything embarrassing to the Biden administration, where credit cards went to $1 trillion. And we called it. And we said, an election year, if this inflation doesn't get under control, if it doesn't get down to 2%, like Jerome Powell wanted, by the way, 2% inflation is still inflation. It's not zero. It just means it gets back down to a more, a much lower rate per year. So what's been happening? People have been feeling kind of good. They've been going out. They've been doing things. But the cost of stuff is still up. And we're still seeing about restaurants closing. Why? And we're seeing about McDonald's struggling and did the dollar menu.
Fridays.
Yeah. TGI Fridays is closed. So guess what? TGI Fridays lives in the middle. Fast casual, they call it, like Applebee's, TGI Fridays, Chili's, things like that, where you go in and you sit down and bankrupt. So what we've got right now, however, the bank stocks seem to be okay. Really? Why would the bank stocks be okay? Do you know how much interest Americans paid over the last 12 months?
How much?
On credit cards. $170 billion in interest at an excess of 25%. Wow. That's the interest rate on credit cards they pay in the last 12 months, and it's going down, which means this is the opportunity for Trump. And one of the big areas you got to get the cost down for people is on energy. You bring cost of gas down, you can actually anti-inflate gasoline and energy and heating oil. And also, those costs come out of getting all those goods shipped to your grocery store. Maybe we'll see a little bit of ebbing in price at the grocery store. But right now, the U.S. Consumer, the bottom third of the U.S. consumers are in a tougher place than they were at the beginning of COVID. They actually got savings relief during COVID.
So let me ask you this question, Tom. If you look at this chart, Rob, you had the other one as well, but let's stay on this one real quick. U.S. credit card write-offs jump. 2010,
yep.
That's after 08, market crash, Obama, 2010,
yep.
Spikes. 2024,
crash of
spikes.
08, people spent,
right.
Then they defaulted.
So what I'm trying to ask you is, if I look at this chart, is 2024 2010 or is 2025 going to be 2010?
I think 2024 is 2008, 9, and 2025 is going to be 2010. Because
so let me get this straight. What you just said right there, Rob, go to the other one. It's very important.
I think
what you just said. So if you go here, I'm asking you if 2024 is 2010, meaning
no.
Are we at the peak, or is next year numbers on loan write-offs going to go skyrocketing even higher than 2024?
No, we're the year before 2010.
Okay, I got
peak.
you.
I'm calling
got you.
peak
Yeah.
next year because remember,
I'm
Trump
kind of with you because if you think about the timeline of COVID and what happened with Biden and the economy the last 48 months,
Yep. So, and by the way, let's look at the impact. The world is starving. I got to grow corn. How long does it take to grow corn? That's what you would look into, right? How long does it take to grow wheat so you can ship bulk? Well, guess what? Trump will be inaugurated on January 20th. Then they won't clear all those cabinet picks for another 4 or 5 weeks. Now the cabinet picks, especially Treasury and Commerce, are in place. Then they put their programs out. Congress has got to debate it. You're probably talking the middle of Q2, getting into May, June, before, you know what I mean, Pat? Before the corn grows, meaning all of the programs from the new cabinet can start having a dramatic impact on the U.S. worker. So what we're seeing here, this is a leading indicator of more pain to come on credit card delinquencies. And we're about to find out how much did they spend. If you hear that there's a lot of spending in Q4, then it's there. And by the way, guess what we've left out here? We were screaming about it and talking about it because it gets left out of the stats. What is it? 4 letters. Begins with a B. You remember?
Buy now, pay later, Tom.
Bingo.
Yep.
BNPL is sitting below the water like a bigger iceberg, with consumers having a lot of BNPL on top of the credit card stuff. I think 25 is going to be our spike, but I think Trump's going to put a lot of things in place with his cabinet to get after it.
Do you ever read the book Tale of Two Cities?
It was the best of times.
It was the best of times. It was the worst of times.
It was a season of discontent.
That's what's going on in America today. So what's happening is just as people are struggling, inflation, interest rates, we see what's going on in the economy. It's the economy, stupid. Credit card debt, delinquencies hit 13-year high. Juxtapose that with, Rob, what I sent you. If you're an investor, if you're playing the Wall Street game versus the Main Street game, the stock market is on pace to have the best 2-year run in the last 25 years. Rob, if you want to use the title of that article. Stocks on pace for the best 2 years. So if you're holding assets, if you own real estate, if you own stocks, your 401k, your index fund, your crypto account, your Bitcoin, you just hit 100,000. We know what's going on with that. So people are getting richer and the poor are getting poorer. Pat, we learned a term during COVID called the K-shaped economy. You did a whole thing about money flows to where? The top. So people get richer during COVID because people got stimulus checks. What did they all do with their stimulus checks? Who quickly became the richest man in the world during COVID? Do you remember his name? It wasn't Elon Musk.
Renault.
It wasn't Jeff Bezos. Exactly. It was Bernard Arnault. Who's Bernard Arnault? He owns a company called LVMH. Louis Vuitton, Moet Hennessy. Everyone got them stimmy checks and balled till they fall at the mall. And now, 2 years later, they're drowning in credit card debt. The average American, 2/3 of Americans are living paycheck to paycheck. The average credit card debt is $7,000 per consumer. The average interest rate is 24%. People are struggling, but only half of the people are struggling. It's the haves versus the have-nots. Half the people are getting richer and half the people are getting poorer. And just flip a coin depending on where you're at. So it's not easy out there.
This is the last chance here for the end of year sale with vtmerch.com. If you haven't yet ordered, we have so many different things with 50% off. The flip-flops right now are $22. The blue future looks bright. There's so many. Obviously, the sizes is the challenge. But if it's got your size, this is your chance to get a bunch of discounts for yourself. And for the first 50 orders, you will get these new Future Looks Bright gold and black keychain that came with Valuetainment logo on it, and on the back it says Future Looks Bright. First 50 orders, you're going to get these keychains, so go ahead and place your order. If you enjoyed this video, you want to watch more videos like this, click here, and if you want to watch the entire podcast, click here.